Good morning, good afternoon, good evening, whenever you are watching this week's video. Y'all, you didn't miss a week. Your girl did. Okay? So, we are going to get back on track. I have your presentation ready to go. You were supposed to get it last week when we were talking about them 7 passive tests, right? So that you could qualify. But let me tell you, I have a good reason as to why I didn't show up in your mailbox last week, and I hope you understand. My children still are in school. My youngest 2 children still are in school. They in school right before Juneteenth. So I'm gonna tell y'all, happy Juneteenth, happy Father's Day weekend, happy summer, because it's gonna be the start of summer come Sunday too, right? So all the things. And now I want you to understand that since they're still in school, the week before last week, right? Not even last week, I'm gonna say it, not even a week before last week. Last week was a very busy week. We did field trips. We did promotion ceremonies. We did pinning ceremonies. It was a lot of end of year activities that happened. Uh, Field days and you name it, it happened. Picnics, all to get ready for the end of the school year, which normally would have happened last week, but because of the weather, it did not happen, and they got some extra days. So they're still in school, but mommy participated. So I took mommy time and actually showed up. Now, one of them was because of some a little bit of selfish, stuff in it. One of the field trips that I attended was to the Capitol. And I had never, yes, the US Capitol. I had never been to the Capitol. This is the first time I can recall out of my 4 kids ever having a field trip that even allowed them to go to the Capitol. And can I tell you, it was an experience. And it's an experience that even though I live in the Washington, D.C. area and could sign up for a tour, I'm glad I was able to take with my youngest because it reminded me of so many things. You see, it's massive. It's really pretty down there. It's a lot of steps. It's a lot of steps. But I had never actually, like, I've been to the Smithsonian museums and stuff, but I had never been to the Capitol. And as you're watching the introduction video, as they explain to you as what happens in the Capitol, you realize you are sitting in the building that laws are made, that your senators and your representatives come to every day to make change, are supposed to make change for you as a constituent. And for me, it was enlightening to understand, oh wow, this is where the decisions get made. These are the powers to be. And to remind me, which I remind y'all quite often, right? That hey, these people in Congress are the ones that's doing stuff with this tax code. They the ones making the rules. Well, not them, but we're not gonna get into the politics of all of it. But needless to say, this is where bills get passed. This is where funding decisions are made. We got to see the chambers where the House majority and House minority are. It just was very enlightening to understand that there is a lot of power that happens in DC, and to be in the building where it happens was an experience. And so I'm glad I was able to experience. I also did a pinning ceremony for my daughter. She finished the 9th grade and is going to the 10th grade and could only pick one parent to actually attend the ceremony. And I was the parent she chose, and I got to pin her to the 10th grade. So this is something new, a new experience. Either my oldest boys just didn't participate, or they just didn't tell us. But this is at her school. This is something that they're doing. I'm glad I got to see it all come together because it came together very nicely. I had questions. I didn't know what was going on, but it came together nicely. In all of the heat last week, and even this past weekend, where I got a heat rash. So, needless to say, I am back, and we're going to jump right into what's going on with the passive activity rules test, because I know this is really why y'all came on to see. Y'all caught up with me and found out why I missed y'all last week, but it truly was for a good cause. It allowed me to show up and be present for my children, and now I am showing up and I'm present for y'all. Let's jump into today's discussion. What are we talking about? We're going to talk about material participation tests. And even though I normally go to the IRS.gov, one of my other sites I go to is Investopedia. So I'm going to link y'all to the Investopedia information where we got this from. But I do love how Investopedia breaks stuff down. I've told that to y'all before. There's videos in Investopedia. There's some great information that breaks stuff down in tangible ways. And I'm going to put my own spin and stank on it. That's what we're going to do, our little tax cop stank right today. All right. So, what we're going through is a guide to IRS criteria that helps us determine active versus passive participation, and we're going to go over them 7 tests and how it impacts your tax deductions. I always want to be like, next slide. It's only me here. Next slide. Okay. There we go. What are the material participation tests? We already know there are 7 of them because we've talked about this before. Material participation tests are the IRS's criteria to determine whether a taxpayer has materially participated in trade, business, rental, or other income producing activities. Now, this is not just tied. Let me let y'all see my face. We are going to, like most people are asking about it because of rental property. This is not just tied to rental property though. So keep in mind, notice that it does say rental in here, but that's one of the categories. It says trade, it says business, it says rental or other income producing activity. So we're trying to determine, hey, are you materially participating in this other thing that's on the side that's earning you some revenue, earning you some income? How do you show up so that we can determine whether or not any expenses, any deductions associated with it, we can leverage? Okay. Now, this is what you got to remember. There's only one of the 7 tests have to be met so that you can qualify. And therefore, then you can deduct the full amount of losses if there are any, because you may actually get them deductions and it still be positive and you don't have a loss. But if you have a loss, this allows these tests, one of these tests will allow you to qualify to be able to deduct those losses. If you fail all tests, it's going to take us to the passive activity rules and it's going to limit how much we get to take. And so we'll talk about those a little bit and then I'll go back into that breakdown of that 25,000 passive activity loss limit if it applies. I need a clicker. I should have put this in my thing. All right. Active versus passive. Now we talked about this as well. All right. Active, meaning you in it, right? Regular, continuous, and substantial involvement. Notice substantial. What this means is that we can, those deductions, if they send us into a loss or we have a negative amount after income, we minus expenses. And if those expenses turn out being negative, we're able to fully deduct that loss against any of our W-2 earnings, right? It's subject to at-risk rules under the Internal Revenue Code. Now, passive is just that. You're not actively involved. Like you do some stuff, and if you meet certain income thresholds, you're going to be able to leverage those limits, but it's not regular, meaning it's irregular, right? It's not continuous. It's not substantial. And there's a limit on how much you can take. And we said, you know, that $25,000 passive activity loss limit, and we don't lose it. We actually get to carry it forward. All right. Material participation may or may not be advantageous depending on what your circumstance is. Everything, this is one of those, it depends. Lawyers and accountants, it depends. Okay, so let's go through the tests. And I know y'all probably like, but Patrice, your thing, your logo's jacking up the sign. Bear with me. All right, we're going to make sure you get it. All right, 500 plus hours. If you participated more than 500 plus hours, then that's your one test. But you know they ain't going to take your word for it, so you're going to have to do some documentation. All right, test number 2, substantially all. Your activity substantially constituted, y'all like, your activity substantially constituted all participation in the venture, meaning you putting all your attention, energy, everything there. Okay, we substantially showing up for it. That's the second test. Doesn't mean you have to pass all of them. Remember, this is one of 7. Any one of 7. Pick your poison, okay? Or pick your prize. 100 plus hours more than a top participant. Meaning that if you got somebody else working in their business because you got a 9 to 5 and you working somewhere else, and let's say they participated 350 hours. 350 hours. And you can show for a fact that, I did 450 hours. I know that's under my 500 hour rule, but what I'm showing you is that I materially participated because I'm going to use rule number 3. Okay? To substantiate, this is why this is material. This is why I'm actively participating in it. Because I done put more time in than they did. I know my person who doing what they supposed to be doing, right? When we go do the math, we really should do, well, how many hours in a week? How many weeks are they doing? And multiply that by weeks in a month and, weeks in a year, etc. to get us to those numbers, because that's how they basing that as their baseline. But I participated more than they did. All right? Significant participation. The activity is a significant participation activity, and combined with all the activities you did, you exceed 500 hours. Now, I'm going to tell you right now, before we go to the next slide, if you're doing anything else, right, you're going to want to be I would stick to, okay, can I substantiate, even though I gave you the one of 450 hours, right, for rule number 3, I'm going to do more hours. I'm going to put more hours in the gym than anybody else. That's what we're working towards. Number 1, make sure that that's solidified and you can document it accordingly. All right? You participated during any 5 of the preceding 10 tax years, regardless of whether or not it was consecutive. So you may have had, we in 2026. I'm going to go back 10 years, 2016. And then let's say stuff was good and you was doing what you was doing. And then 1920, stuff got sticky. 1920s before that, 16, 17, 18, you was rolling. 1920, because of the vid, stuff got sticky. And then you got back in it around 23, 24. All right? That's 5 years. We already said 16, 17, 18, 23, 24, but they weren't consecutive. But you got to prove this and definitely have your logs to show this is what I did this year, this is what I did this year, this is what I did this year. Common theme is we got to have some proof. Test number 6, personal service activity. This activity is a personal service activity. What I kind of do falls into that category, hands down, right? Health, law, engineering, architecture, accounting, performing arts, consulting work. And if you participated for any 3 prior taxable years, notice they don't say consecutive. Notice they don't say you got to do this. Any of these, and you're doing personal services activity and you've done it before, for those people who ears perked up for being a consultant, make sure you can prove that you did consultant activity. There are certain things you're going to have to document just in case this comes into question. Number 7, facts and circumstances. You participated more than 100 hours on a regular, continuous, and substantial basis based on all facts and circumstances. All right? So now, what isn't going to count? So, not all time spent in an activity counts towards all these hour rules, right? Test 1, 3, 4, or 7. That's when hours are talked about. Now, here's some things we got to keep in mind. What doesn't count? Investor review time. Time spent as an investor does not count unless you show direct involvement in day-to-day management. So when we going on these trips and you like, wait a minute, I'm looking for a property. I haven't found a property. I'm doing this thing and I'm going to use real estate because this is where I see it most. We went here. We had a trip. We went to a conference. We did this, that, and the other. I looked at some property. I didn't buy property. I didn't talk to the people. I drove past the house. We was driving for dollars, et cetera, et cetera, et cetera. That's my time. You got to actively, and I'm going to use this for real estate so y'all can see my face, right? Because there's a way that you don't necessarily that you can actually do this without just driving for dollars. Let's say you're a wholesaler, and those of you who do not know what a wholesaler is, a wholesaler will lock up the property, get the deal, and then go sell that to someone else. Look it up. I'm not going to go into whole details, and I'm going to use rental property as a hotel, as an investor, right? You lock that property up, You actively done that. You locking up several different properties. You talking and getting deals. You putting down earnest money and being like, I'm shopping. That's not, even though that's investor review time, you are involved in that on a regular basis and can log your hours. That's totally different than just driving by on the weekend and being like, babe, one day we're going to have a great real estate portfolio and we're going to do this, that, and the other. That's totally different. That's totally different. And that's where people will get caught up. Well, we did this and we went to this city and we took a trip and we was just riding around and we was dreaming and hoping and wishing and praying. And I'm not trying to be facetious. But I'll have those type of conversations and I'll be like, you might be pushing it because we don't have no income. I don't see that you logged any contract. You got to be ready to prove that something actually applies. Okay? Non-owner work and commuting. This is for anybody. I don't care who you are. It's not just real estate. This is what gets people caught up when it comes to mileage as well. Work not customarily done by owner. And time spent commuting. You can't get commuting hours for nobody for a deduction. And even though we spend a lot of time in a car, we got to keep this in mind. You can't do it. It just don't happen. They're excluded from material participation hours. Okay? So keep that in mind. Loss avoidance work. So that means for my real estate investors, you going there, you looking, you done got out the car, you went to Home Depot, you went and got some stuff. You actually in there working with the homeowner guy to make sure it got done. You overseeing it. Yep, my property is good. That time we actively doing that. Just going back and forth. Okay, I'm looking at the property. We're going to have to be careful about that. Loss avoidance work. Work undertaken primarily to avoid passive loss disallowance rules does not qualify as material participation. And then uncompensated management. Participation in a purely managerial activity where nobody else receives compensation cannot be counted. I'm going to let that set. We're going to go to the article because I got other slides and I ain't going to try to talk to y'all. We had 16 minutes already. All right. We got limited partners. The participation of limited partners in enterprises they own is considered passive unless they qualify for the hour test, right? Test 1 is hour. 5 or 6 specifically, right? Multi-ventures, one entity. Now we can do it when a taxpayer participates in 2 enterprises through the same pass-through entity. At least one of the 7 tests must be met for each venture separately. There is a distinction or exception for real estate. Real estate rental activity is generally considered passive, and I've been stressing it. Real estate normally is always passive, even if you materially participate, unless you qualify as a real estate professional. That is the exception. That is the exception. And then our hours and rules for real estate are totally different, which I got to come back for because that's that 750 hour rule. All right, they got more stringent rules because we can't be out here playing as real estate professionals. Now, how to verify and document participation. Taxpayers with an ownership interest receive participation credit for work done. This is how you keep yourself clean. Do daily logs. Use your calendar. Use them phones. People, use them phones. Log this stuff now. Put in your appointment. I met with such and such at this time. I did this, that, and the other. Have notes. What did you talk about? And with technology now, you can just talk into the phone. Hey, we did this on such and such a date. Here's my note. Keep your little notebook. I use a lot of stuff in my Remarkable. That's how I keep track of what I have done and what I have not done. And then somebody else remind me, Patrice, you also did not do this. Okay? Any reasonable means. The IRS accepts any credible records. The key is consistency and detail in tracking your involvement. Right? How it impacts your taxes. You only got to pass one of them tests. The most straightforward and easy one to qualify for is an hour test. And I already said, number 1, 500 hours, which means you got to do what? For all the people in the back, what we doing? We're logging our hours. And we're not only logging our hours, we're logging what we're doing in those hours. I'm going to tell you, that's going to help you in real estate too. Okay? That log is what they're looking for. Then you can get 100% loss deductibility, meaning if you had a negative because we leveraged some stuff and you had a loss, we get to take 100% of that loss and offset it against any other earnings, any other income. But if not the case, if that's not the case, we're going to have to bank that. We're going to be, we have a loss, we're going to be limited to that loss. Now, we do have another rule here. Passive losses generally cannot offset active or portfolio income unless we are under passive activity loss rules. Meaning, I'm going to use investor stock stuff, right? Because that's passive in most cases, right? You got to have them losses from the same category. Passive got to offset passive income. Passive loss got to set off passive income. Unless we qualify under the passive activity loss rules, which we need to go into next week. We're going to talk about, well, what are the passive activity loss rules? And what is this exception that you're talking about for real estate? What is it? Why you didn't break that down here on the slides? Well, I got to give y'all a reason to come back. But you had to know what tests they are. So I'm going to wrap this up and remind y'all, this isn't just for real estate. Remember, this is for business, trade. That's actually trading. I'm trading stuff, right? Not just stocks. From trading, right? Any other activity that's earning you income and you materially participating, you need to make sure you can get into one of these tests. And it's not passive. You are materially participating, right? The 7 tests. You're then allowed to leverage those losses. And hopefully this signals for my people that are actively trading too. Because if you got a trade journal, right? Your bottom line, meet one of the 7 tests. Document everything. And I do mean everything. Know the limits. Certain hours and certain activities don't count. So don't put them in your log. Because if the IRS look at it, they're going to disallow it. And we don't want to disallow it. Real estate has special rules. We'll get into those special rules in another discussion. And then talk to either a tax professional or a financial advisor if they need to help you along that route. Okay? That's the end of our presentation for this week. Hopefully this was helpful, right? Those 7 tests, and we're going to make sure y'all know what those 7 tests are, and that you have your guide. We're going to link you to the Investopedia article where we pulled this from, so you got it directly from the source. Hopefully it makes sense. Make up your mind now what test you're going to prove and how you're going to document it and where you're going to document it just in case, and keep them records. Keep them records so that without a shadow of a doubt, if anybody ever was to come ask you, you can prove what you're doing. So now, the 2 topics we got to talk about remaining for certain are real estate professional. What makes me a real estate professional? What I need to document? How do I qualify? You already talked about what doesn't qualify. What can I do so I can qualify as a real estate professional and it not fall under passive activity laws? But before we get into that, I have to go back and explain, well, what are passive activity laws? What are rules? And what are the limits so that I can really understand it? You said it's $25,000, but Patrice, I need a little bit more information to understand what that is and how I qualify if I don't meet one of these 7 tests or the exceptions for real estate. Okay? So that's what we're going to be talking about. 2 different presentations coming up. I will holler at you. You all have a wonderful, wonderful Juneteenth and an even better Father's Day. Because I know people be forgetting about the fathers. Go get them some flowers. Don't just get them a grill. Get them something so they can understand that they matter. Not just mamas, because you wouldn't be here without the mama or the dad. And the daddies need to recognize that we appreciate them and are so glad that we are able to be here to love on them. Until next week, I'm going to holler at y'all. Peace.